Sharing your home and providing support to a person with an intellectual or developmental disability is great for everyone. And now the IRS is making it even more beneficial for direct support professionals by providing a way to substantially increase their take-home pay at no expense to their employers.
The federal government is giving a break to individuals that are supporting somebody and living in the home with them. So any hours that are worked with that specific individual receive a tax break.
There are two tax benefits. If you live with a person with a disability, so you got to live with them, the same four walls, and if you receive a wage to do so, and the source of that payment is what's called a home and community-based services waiver, and those waivers are Medicaid waivers that fund basically all services for people with developmental disabilities in New York. If those three criteria are met, your wages are off the federal income tax grid and the New York State income tax grid. Your wages are not taxed for income tax purposes. Also, you're very likely to receive some form of a housing subsidy and perhaps even live rent-free in a shared living arrangement. The value of that housing subsidy that you receive, that a worker receives, is also not taxed. So the wage is not taxed, your housing subsidy is not taxed, and this provides a great pay raise, in effect, a pay raise for people who engage in shared living arrangements.
If anyone's considering a shared living arrangement, I think it would be good to go for it.
These guys are really resilient when it comes to change. They can really adapt to things really easily.
Thinking about it means you've already started the process, and a lot of things in your life will change. Some things will become easier, little things are still difficult, but it's really benefited us. It's changed our lives, and I think it's done that for the better.
Sharing your life and a home with a person with an intellectual or developmental disability is a unique and mutually agreed upon living arrangement. It's a stimulating alternative to group living, which is typically based on shift staffing. So, we know shared living is a great idea. And thanks to this hidden gem in the tax code, IRS Notice 2014-7, providing this personal care and support in your home is even more beneficial, as it addresses difficulty of care payments by expanding their definition. How does it do this? Let's recap. If you share your home with the person you provide support to, and the source of payment is a home and community-based services waiver, then those wages are excludable for both federal and New York State income tax purposes. That's basically it. It doesn't matter who owns the property or who holds the lease. It might be the person receiving supports, or a member of their family, or an agency, or even the shared living provider. And it doesn't matter whether it is certified or not. In effect, a 20 to 25% pay raise can be achieved with no expense to their employer. It's a win-win. There are direct support professionals in New York who have received thousands of dollars in tax refunds. The basics the IRS will want to see include documentation that the provider and service recipient lived together and that the provider has no other home, the service recipient's Social Security number, proof that wages paid were derived from a home and community-based services waiver program, proof that the service recipient is enrolled in a home and community-based services waiver. The provider will also need to show the individual support plan, demonstrating that the services delivered were authorized and evidence that the provider agency is licensed or certified to provide HCBS services. That's it in a nutshell. Be aware there are particulars which might make some arrangements ineligible for this tax benefit. You should always consult your tax professional. If this interests you, tell your providers and their human resources and financial staffs. Not many are aware of this hidden gem in the tax code.